What is going on, everyone? Happy Friday, February 28th, 2025. What a week it has been. I got a lot to update on here, some breakdowns in some major markets, some major ones. We'll take a look, some craziness at the White House today, too. But let's take a look at what really moved markets today and this week. I think you'll find it, maybe surprising where really the brunt of the pain is. It was in some strong areas, this year. So let's share the doc, and I'll show you what I mean, because this week really went into the eye of the storm. What we're talking about. Nice little doc here. I like what it put together. Bitcoin, Chinese markets, and semiconductors really is where the pain was. Here, take a look. So today, first off, financials, value stocks, low vol stocks, they all rallied quite well. We'll take a look at all those charts. While solar, what a dog. That went to a new 52-week low today, so not looking good. Other areas for 52-week lows, India, new 52-week low, the uranium miners, 52-week low. So there are some spots really not finding bottoms yet and continue to go lower. And emerging markets, a big day lower. We'll take a look at EEM. China's been, a huge pusher higher of that, and we're waiting for pullbacks in that. And today, you got one in the EEM. And then on the week, so really where the pain was, so this week characterized by breakdowns in Bitcoin down 12% this week as measured through the ETF. And there's some funky things going on in the ETF world for Bitcoin. We'll look at maybe, or I'll just mention it now on the show. IBIT is still one of the performers over the past year, and you could be long IBIT, short BITO. It's pretty crazy. IBIT is up 35% year over year. BITO, due to the way it borrows, is down 35% year over year. So you can pretty crazy pairs trade where you're still long Bitcoin, but due to the way it works, you can actually have crazy pairs trade and absolute return, buying one and selling the other and still being long the asset. Anyway, so Bitcoin down 12%, semiconductors, Chinese tech also really not great return. We'll take a look. And the market overall down 1.7%. And that was with the big rally it had today. So not a great week, down, 1.5%, almost 2%. If you annualize that, it's pretty ugly. So the market continues to go lower. Let's take a look at the chart, and you'll see what we mean more. All righty. So let's zoom this in here. Boopy boppy. Oh, another programming note as well. My family is expanding, so I will. My wife is due in less than a month, so the shows soon will go to Tuesday and Friday at 4:15, 4:20, right around there. I'm going to do single stocks on Tuesday because I got really good feedback from that, and then Friday I'll do the market recaps because they're very especially helpful for moi. So that is coming soon once there's more wah-wahs around the house and more sleep deprived and exhausted. All right, so here is, thank you very much, Caleb. Thank you. So yeah, and I'm probably, once the baby's born, I'll go cold for 2 weeks. So if you guys see that, I'm not dead. I may be, physically and emotionally, but I'll probably go dark for 2 weeks and I'll come back, and have like 1 or 2 times a week videos, as I said. All right, so first off, we'll ignore the single stock movers here. MicroStrategy's had a strong rip back, up 6%. That's all I'll pay attention to here. Tesla's still unbelievably weak, under 300. Caleb, anyone else, if you have a ticker, please put in the chat, and we'll take a look. It's been a crazy week. All right, so here was the opening bar. We continue to go lower here. We bottomed at 1 o'clock when there was some White House craziness with Trump, Vance, and Zelensky at the White House. He got thrown out. They got very heated, apparently. I didn't see the clips. But we bottomed here at 1 o'clock. It's important to know, so we hit 582 in SPY at 1 o'clock. That is lower than I thought. I was on this show last week, and I always open with the SPY chart, and I thought 59, or in terms of SPY, 590 is a very, very good support, and I thought that would hold. And if that breached, we'd potentially go to 575. So what's happened here? So continuing with that theme, right, of 590 of being good, of being strong support. That is right here at my cursor. We did, a fine job with that up until today. It really started to go lower. Like I said, we bottomed at 1 o'clock, and it really sprung higher. Our VWAP was right around 586, and a strong amount of buying. Something that typically doesn't happen. We used to see the vol crush on Fridays, but typically, people in terms of this market lately, they've been very frantic and scared, especially with the tariff tweets and stuff like that. You don't want to hold risk into the weekend. This time, it looks like potentially we did sell off a little bit too much. We were oversold a couple of days ago in the morning when we hit those 590 levels, and today we were lower and not a lower RSI, not a lot of panic selling, and then we rose, and then nice pull above VWAP at 330, closing at 593. So as we zoom out, so I got like kind of good news and bad news, but so obviously some of the counts. So if you remember before, I'd say February 20th, we had our bullish accumulation peak date, and we were going to be in the trough area distribution till about on or around March 5th. So essentially, we hit the peak literally the day before that, February 19th. So we pulled it forward by about a day. And of course, there's about 28 days last I checked in February. And these cycles typically run around 15 days that the market will, adjust, especially in the index land for SPY with its, vol adjusted levels. So February 19th, you basically push it back 15 days. It takes you to about another week from today. So I still do see about another week of bearishness. So, but here's the thing. So the bottom is right around that 585 level. So we basically flirted with it. Yes, today we got to 582. I'm still a believer of the 585 level. It could be, we had an oopsie. We did close below it yesterday, and that was ugly. Small caps look, scary. There are other areas. We'll see in the charts the narrative that comes together as we look at charts all over the world in different areas. But I do like the 585 level to hold. I think we bottom next week. The rally that takes you, into mid or late March, I had previously thought we were going to go to new all-time highs. That has been, I believe, invalidated due to the chopping of wood and carrying water that we have to do here to try to reclaim that 613. And again, I said before, I would love to know what is going to make us hold above 610 SPY. It is immensely difficult. I don't know what's it going to take to do it. We flirted with it that week of the highs, February 20th, and then we fell right off. So it's market's pushing above its weight so far. It's not able to do that just yet. Bringing that all together here. So as I said, I like the bottom here. I think your floor is around 585. I don't think the absolute bottom falls out from here. And again, the 200-day moving average is 570. I was having a meeting with a technician last night. I don't care about the the bull run being in jeopardy or anything like that until we close under 570 for about a week straight, and I see the 200-day moving average start to go south. Then everything, risk management, really pops up. Your spidey senses should start tingling because a lot of program sell orders may just immediately start to take place, at least in percentages across different vol assets. So be careful of that. It's what people are kind of thinking. What we're seeing in Ethereum, which hit 52-week lows today. Those Ethereum ETFs have hit technically all-time lows. So is it a sign for Bitcoin? We'll take a look at the charts, or does it separate and differentiate itself to be a leader in the crypto world? We'll see. But first things first, look, as I said in SPY, I see a bottom around 585 next week, probably frustrating traders and investors next week. And then the next rally towards mid to late March takes you to about 600. It's going to be a lot of work to get between 585 and 600, in my opinion. And then we try to work towards, hopefully in April, trying to get back towards the 610 to 615 level. And that's about it. All righty. All right, let's get into some craziness that moved today. So I'm going to bring you charts from all over the place. Okay, XLF monster today, up 2%. Okay, these guys are coming. This is my latest purchase, by the way, in the portfolio. Very happy with it. Not a lot of bright spots. This has been one of the leaders this year. It's funny if you look at the sector leaders through the first 2 months of the year, as we start March this weekend. It was all the laggards from last year. So healthcare is kicking it. It was a dog. Real estate we'll take a look at is one of the leaders. Tech down, massively. The Mag 7, the only real killer is Meta, and a lot of it's because they're reduced spend in AI, so they have that nice little sweet spot of of margin for traders, as opposed to like Nvidia spending so much money, and Microsoft looks awful, and I'm on borderline perma bull for Microsoft, but the chart looks awful. There are better areas. So XLF hit highs 3 weeks ago at 52 even, basically. Well, I'm not gonna say basically. It's 52.26, and today we're 52.11. So this is a rock's throw away from new highs. What do I see in the charts here? I think this is a great pickup if you can get in on this around 51.15, right around there. I like your risk reward because, again, the target is right around 53 even. This isn't terrible either, 52, but you're buying it after quite a strong bar candle here. I mean, so If you can get it around 51 even, I love that. You know, the market's going to be choppy. Pick your spots. Like I said, overall, let's see how the narrative feels here. Overall, next week, we'll see which area is going to be weak or strong. Overall, I think the market in terms of beta will be weak next week. This should level out and start to base around 51. That'll give you a great entry. The target is 53. All right, next. I tried to keep this as differentiated as possible, but there weren't that many movers up today. They came from the same kind of land. Value had a nice move up almost 1.5%, up 1.4%. So the value basket, you know, a lot of the stuff that we're going to look at that led, you know, this week and today were, you know, fear-led defense. It was a lot of fear this week. So this group of value peaked basically Thanksgiving week at 182. Nice rising 200-day moving average. Great looking chart, honestly, all year. A little bit scary here on the 10th, 11th of January when it clipped the 200-day moving average. Again, because this is going to be a lesson. I had this conversation with someone else as well. If the 200-day moving average is still rallying, you do want to buy that. I wouldn't say just liquidate the portfolio, risk management 101, If the 200-day moving average is still rising, and especially holding that 1 year 50% Fibonacci retracement, which essentially for this stock would be 154 to 180. It's going to be right around here. I should have dragged the actual Fibos. But it was right around 168, and it held that as well, like through actual closes, which it did. Okay. You still want to hold that stock. So that's what I'm saying about the S&P. So in terms of this value, okay, because obviously let's see where folks are going to go into. I think this is also a good pickup. This almost looks a little bit more defined to me. I think a great pickup would be right around 177 if you can get in right around where my cursor is here. The target's around 181, but it's got to get above that 179. As you can tell here, it's been pretty difficult. Hasn't been above 179 since the 52-week high week back in December. So it takes a lot for this to move. It's been kind of, I mean, look, you see the trade. You sell it at 179, you buy it at 175. It's a very tight index, you know, that tracks this. But very small tactical trade. If you need a place to hide, this is not a bad place to get in around 177. And as I said, a target of 179 to 181. It was up nicely today, about $2.50 or 1.5%. And the last one, again, so this is low vol correlated with value. This has been well, you know, trading as well. Similar, peaked the same week, Thanksgiving. Basically, same exact chart. January 13th had a little bit of a scary dip. Today, you're actually getting a move outside of the Bollinger Band. It is not exactly the same as the value ETF. This is low vol. So, you know, staples and things that, you know, did well this week. For this, this one a little bit tougher in terms of entry, in terms of a trade right now. I would want to get in around 93. So you're going to need quite a bit of a sell-off. And then the target is right around just a smidge higher of where it is here, about 95 even. So again, very well defined. This one's been trading better, though, not ping-ponging around as much as value. Woo, woo, woo. Okay, let's see. Did I share my screen? I would be like a jackass if I did from the beginning. Okay, wonderful. Stuff that got hammered today. Solar, there have been many loud folks calling for this to be the reversal of the year kind of stuff. I've been hearing this since, like, honestly, Christmas, and I am, you know, a seller. You do have to be careful because some the market has rotated into assets that have not gotten love. This has not gotten love, as you can tell from the chart. But this little carrot here, the little action here, denotes a new 52-week low. So that, for me, tells me that it is not over. I think TAN it was down 4% today. It is continuing. I called for this. I was way early. I had said this was going to head for a 52-week low back probably like here, and it undercut it. So this was end of January. Today, it finally happened. I think this is still going lower to about 3160. You're going to get some vol expansion here. Ugly looking candle. And I think you're going that low, about 3175 or so. So I think this is going to have an ugly week with the market. Or, you know, I don't want to say like ugly, super ugly for the market, but this worse. This just looks ugly all around. Got hammered today. That's actual 4% is a multiple sigma standard deviation move for the TAN ETF. So a big move and a new 52-week low. Other one here. Oh, yeah, dead cat bounces on that after it does bottom around that 32 handle, 3165. You probably could get a vicious rip in a couple of weeks to 34, but I'm not going to be there for that. Emerging markets, as I said, you know, China, Mexico, Brazil, it really is a different world that we're trading in. As you can see, the EEM chart peaked back in October with the China stimulus announcement news. It was just a rocket ship. The stock peaked at $47. Okay, now China is a major story. I think China and Bitcoin and gold are the market right now for the time being. Before we talked about airlines, we talked about semiconductors. Right now, I'm telling you, we'll look at the charts. The best trades of the past year. It's teaser. It's what I just told you. So a big factor of EEM is China. So let's take a look at what just happened here. We are under the 200-day moving average. The 200-day moving average is 43.40. Okay, we closed below it. We haven't closed below it since the beginning of the month. Is it lights out? Is that the end of the trade and so on and so forth? I don't think so, but this is still going to have a rough week. I think this continues to go lower towards about as low as 42.40, I believe. I think it's going to try and move a little bit lower here over the next week, and then it'll bounce to about 43.85, which would be basically a small tussle above 43.85 is right around here, above the 200-day moving average. It is still rising. One of the charts to look for. This is going to frustrate traders and investors alike as well, I believe. Whenever you have forecast just in terms of probability of what's likely to happen, these aren't predictions. These are mean reversions, levels in existing momentum. We go below the 200-day, and then a week later going for above and lower and above. Traders kind of don't know what to think. Okay, so that is the call on EEM. So yeah, overall, if you want to get an entry around 42 even, I don't hate your risk to reward there. I don't think that's terrible. But FXI is the better play. We'll take a look at that at the end of the show. And the next one, my puts that I've had on for quite a while, because this chart looks terrible and there's nothing else you can tell me about it. Since mid-May, no reason to own this. Absolutely crapola. Even though the actual low came when the Fed cut on December 18th, all the way down here at what was the dollar? $22. It rallied all the way to 26 and now down 24 today. A nasty day, down 2.5%. That is a multiple standard deviation mover for the ETF, which is why we are discussing it here. This is going to I think, start to base. I'm actually going to say something a little bit different from what I've with the position is. But I think this is going to base around 24. I think this has gotten, the crap shellacked out of it enough for a 10-day span from 26.5 to 24. I think this will start to base right around, this 24 even. And then I think you'll start to see this move towards 25 over the next 2 to 3 weeks. So, not super exciting there either. So again, of the overall trends of what we're saying, we're talking about financials and value and low vol and solar hitting new 50-week lows and dead cat bounce trades. Just pick your spots. It's going to be a frustrating market, I think, due to all the contributions that we have in terms of White House headlines, tariffs, Doge effect on the economy, numbers, reduced spend, consumption, PCE, inflation, etc. So, all right, this will wrap up the week well. So all I did today so far in the, these 18 minutes I was talking about today. Let's recap the week, okay? I mean, I did look at, the trends going back a year and such in these charts that we discussed, but let's do the week. Top gainers this week, and this is how I know it was all to the downside. The fear led. The best ETF gainer this week was volatility, okay? So, typically I know that was the fear gauge winning. Then that was what was winning this week was fear. So VXX up 4% this week. And look at that. It got Dikembe. It got the 200-day moving average and Dikembe. I got to 47 literally today. I got to 48, and then it closed at, we'll call it 46. Now, what do we see for volatility? Same difference. Again, I had said, I think it was a week ago, I said this was going to make a push towards 48. The 200-day was at 47. I said it's going to try and do one of these. And literally it happened today. It tried on the 25th, 3 days ago. Again, it couldn't do it. You see this happen time after time. February 3rd, literally to the penny, it touched it and then it went lower. So we had this as well. I think this goes with what I was saying for next week, the market to bottom and for this to start to begin its distribution mode. So I think this will hang around this $47 mark. It's going to try to make another push next week as the S&P tries to base next week. This is going to try and find its level. I think it'll top around 48 if it tries to make another move next week, 47, 48. And then you will start to see this one descend towards about 43.5 over the next 2 to 3 weeks. All right. So again, much more, it's a much tighter move before we're talking, for new 52-week lows, which would be 40 handle in this, 40 to 47. That fun ping-ponging move, right? 40 or 41, 47, 40, back to 42. Right now, we're literally just calling for it. I think it's very, possible that we peak around 48 and we go to 44. I don't see it happening, the new 52-week lows in VXX happening soon. There's just a little bit too much fear out there. All right. But your number one ETF gainer this week, that thing, volatility. So it's fear. What else do folks buy when it's fear? Your number two gainer this week, bonds, which have looked like absolute garbage lately. They put in a 52-week low January 14th, so literally exactly 6 weeks ago. And it's been pretty much just straight up. This TLT, the 20-year bond, essentially, is it hit 85 that day. We've got all the way to 92. Look at what it's trying to do here. It's trying to take out the 200-day moving average. It's 92.73. This thing is, it's just straight right here. It hasn't closed above its 200-day since December 9th, so that was before the Fed cut. Quite a different environment. Oversold several times. The market is accepting higher rates. Again, TLT, more oversold due to the relationship. Bond price go lower. Yields go higher. What do we think in the short term for TLT? We had talked about rates coming lower, and that would be a lift to the market. You got to be careful of what the market's interpreting when rates are dropping or rising for the wrong reasons. So I think this has had a beautiful run, especially just from here in a short time span from the 12th. The past 2.5 weeks, 87 to 92. I think this is topping out right around here at 92. I don't think it's going to take out that 200-day moving average. And then I do believe this is going to head to about 89 even, 89.30, right around there in the next 2 to 3 weeks. Again, so bond price would drop, rates would be higher, probably putting a lid on the market as we try to base and not, rip to the upside. And then the last one, what else did they buy this week? More defensive stuff. They bought real estate. Again, really, real estate has been a star this first 2 months of the year. This thing was a dog last year. So we'll talk more about it as we look at the best winning trades of the year and such, but rotating to other areas. You can't just have semis every day, all day, every day. It just doesn't work. So a lot of other parts of the market are getting love. Yeah, they're inflationary, but we'll take it. You got to take that as it goes. So real estate, a really ugly tape here from when the Fed cut December 18th, and really had a lot of work to do. Honestly, like jury was out just until a couple of weeks ago, and now it's etched that comeback, if you will. IYR really a solid week for it, up 2%. I think this is going to pull back just a little bit to about 96 even over the next week or so. And I do think if you want to get in the name, that is not a bad opportunity. I would look to pick your spots. Real estate, this doesn't look bad. I think it's going to pull back to about 96 in the next week. And then the target, though, is just about 99. So I'm not, looking at these new highs, that did back in September. I don't think that's happening. But again, tactical trade, get in around 96 if you're able. And then I would get at 99, or we can say longer. The trend overall is quite strong. There are worse charts than this. Top 3 losers of the past 5 days. This is really what it's all about. What got their crap kicked in this week? Here we go. The leader is actually Ethereum, but I focused on the big boys here. Ethereum was down 17% this week. I'm focusing on IBIT, which is down 12% this week, and that is ugly. It ugly. So let's take a look. So IBIT down 12% this week, or average of a little bit more than 2% a day. Today was up almost 1.5%. But look at this. So the peak, obviously, the week before Christmas, actually the day before the Fed cut, and this stock hit, we'll call it $62. We've gone from 62 all the way. The lows today was 45.5, and it rebounded to go to about $48. I think this will base around 49. I've been saying, and I know now it seems crazy. I think a week ago, 2 weeks ago, I said Bitcoin's getting ready to go. I thought it was going to 110 by literally like right here, what we're saying. Obviously not the case, as it's struggling with 85K. It needs help. It needs market help. Really a breakdown. Looking at the IBIT, if you're just looking at the chart here, you did not want to see 51 break, and boy did it. The 200 moving average, again, you don't throw the baby out with the bathwater. This has a rip roaring rising 200-day moving average, your support there is $43. We're at 48, so it's more than 10% away. Even if it undercuts it, I still think you give this the shadow, the benefit of the doubt. So my call for Bitcoin again, never short a superstar. I mean, I guess you can technically look at Tesla, but that is no star any longer. Yeah, I think this base is around $49. Here's the issue. The pops, I believe, the rally, I think we will get in IBIT for the next 2 weeks or so is only going to get you to about $53-ish. Tops 54. So take back what I said. Obviously, that is invalidated for the time being. Another thing, I guess, is maybe more anecdotal. I remember also texting a technician, you know who you are, in November, and I had a prediction for our target for Bitcoin 110K or around February. And the crazy thing is, we were here earlier, and then it gave way all the way to 85. So Bitcoin is where it should be. A lot was pulled forward. It's still having a rip-roaring year. We'll take a look at it where it's done the past 52 weeks and where it lies. But right here in IBIT, the worst area that you could have been in this week, down 12% in just the past 5 days. I mean, literally, if you're looking at the stock, this thing's gone from 55 all the way to 46 in a week. So IBIT, Bitcoin vol is back. As I said, I think it's going to bottom right around 49 here. I like the buy here. Obviously, see how it trades this weekend. They had a surge of buying in the SPYs in the market towards the end of the day. We'll see if that bullishness carries over into crypto over the weekend. Ethereum is scary. That's putting in 52-week lows. The actual asset is 52-week lows, and technically the Ethereum ETFs are putting in all-time lows since they've only been trading, for a year. So that is scary. We'll see if IBIT can differentiate itself. And as I said, so a basing around 49. And I do believe this will pop to about 54. So that's about $5 or a 10% gain. So, curb your enthusiasm for the time being. Next, what I used to say, or not used to say, it is one of the, if not the most important chart in the market, the semis, the SMH, the second worst place to be in this week. SMH down 8% this week, and it was up 1.7 today. Again, character change. So ugly yesterday. What happened with the SMH? This 200-day moving average still rising. It is still rising. So I'm not going to throw this thing away. It is still rising. It's 247 even. We are trading 232 now, however. So what is the call on SMH? Another thing that before, we remember right here, we always used to say, you sell it at 260. I'm sorry, right here, so you guys can see it. You sell it at 260. I should have said it this way. You buy it at 235, 240. And you sell at 260. It was just ponging over and over and over. And now you got to be careful that old support, does a 200-day moving average, doesn't become resistant. So far, it's been a week. Doesn't look good. It hasn't closed above, 200-day moving average since the 24th. Don't love that. I do think SMH bottoms and base is right around 230. So, which is, a lower level. Don't love to see that. 230 is levels that we first saw in SMH in May. So we have given up ground. We've seen what happened with NVIDIA this week. So I think the bottoms around 230, like I said, with the market tries to find its footing this week. So right here where my cursor is at 232 half today. And then the bounces over the next 2 to 3 weeks in this specific name takes you right about 247. That's the 200-day moving average. So you got to be careful. And then after that, due to the inputs, that 200-day moving average very well may go flat and then go lower. And then due to the allocation constituency in the indices, you could have a drag on the Qs, which pulls down SPY. So we'll see, and then which would drive more, dollars technically into the Dow and the IWM, the small caps. So we'll see, which would lift up real estate and financials, which we've seen have a good week. So a lot of things happening under the wheels with some big, LeBron type leaders here, like the SMH. Awful week though for the SMH, down 8%. And the third worst spot you could have been in this week was K-Web or Chinese internet. We've been looking for a pullback on this monster. It's had a big pullback, in the past week. So last Friday was at $37. Today we're talking 34. Now what? Now what you say? Or I guess I say. So I think that this is still a strong chart, in case you didn't notice. This thing did peak with the rest of the China stimulus October 7th at $39. It got very close within $2-3 a week ago, and now we've come back. I think this tries to find its footing right around 33.70 is not a bad entry, but this was an ugly looking candle today, down 2 and almost 0.5%. If you get in closer to around, 32, that would really be a marvelous entry. I think it possibly happens next week. And then that would be awesome because the target's closer to 36. So 32 to 36 would be the trade there. And again, you got nice support here at the 200-day moving average at $30. So KWeb, also a good spot. I do like FXI better. We'll get into it. All right, so top three absolute trades of the past 5 days are all to the downside. The best trades this week were short Bitcoin, short semiconductors, short Chinese internet. Obviously, a little bit overlap there with the tech and kind of crazy higher vol trades. But those were the charts of the trades of the week: short Bitcoin, short semis, short Chinese internet. And now for one of my favorite parts, and these are new entries. These are it's pretty interesting, and we'll see if it gives us warm fuzzies or not. Top three trades of the past 52 weeks. In case you didn't know, that is last February 28th through today. The best ETF performer in all the land, there it is, the gold miners, up 53%. The best ETF in the entire world in the past year. So, and I actually think this is setting up right here. So the highs were back in October at $44. You got the 200-day moving average right here at 37.70. This has had a kind of a sharp decline. This thing moves. It went from 42.5 to 39 in just 8 days. So I think this is basing right around here. If you could get an entry at 38 even, that would be amazing. I think your risk reward is outstanding there. Truly, really, really, really do. But I think more likely is an entry around 40, to be frank. So that's still not bad. If you could get under 40, that would be great. 38 would be perfect. And the target for this is right around 43 to 43.5. So right around there, I think it's going to try and get close to its October highs. So I like this one for the next 2 to 3 weeks, GDX. And it's your leader in the past year. You're not buying a laggard by any means. Overbought throughout. This is not just Johnny come lately. This thing was overbought back here in April for a day or two in May, back in July, October. Yes, it did get oversold in November. Still held a 200-day moving average. I would have liked to see those confirm and both break. And then here it also happened. It actually went under the 200-day moving average. But what's happening? The 200-day was continuing to rise, never oversold, even with new price lows. It recovered, new overbought conditions, still holding a 50 RSI largely since the mid-January. Love it. Looks great. And already analyzed the levels. This is your best performer in the entire market over the past 52 weeks, up 53% GDX over the past 52 weeks, or almost 1% a week. Last I checked my math. Number two, FXI. Okay. FXI is the number two. I thought I was going to say Bitcoin, but due to the 12% drop it had this week, it was actually tied with China. And now it fell off to our number three. So the market is gold miners, FXI, China. These aren't double leverage, triple leverage ETFs. These are ETF returns. Gold miners up 53%. Just right behind it, China. And again, these highs were back in October. A lot of highs were back in October. And this is starting to pull back. Again, overbought in May. This is not Johnny come lately either, this story. And a lot of people still own China, so this could really explode. September, it was overbought for weeks when they were announcing their stimulus. And then they got crazy again just very recently. So the setup for FXI, this is a messy chart in terms of trying to get in because you don't want to super overpay. Just for, the 21-day exponential moving average is 34.20. That is not a bad entry, in my opinion, with a 36 target. This was overstretched, in my opinion, the move towards 37 it had this week. I didn't think that was, real. And then it gave it back pretty quickly. So if you can get in around 34.20 would be an awesome move today, down pretty hard, 2%, trying to give you an opportunity. And then a target of 36. So FXI, your second best leader, gainer in the past year. And then third is your IBIT up 38%. Okay. And we already looked at this chart in terms of where it's going. I said it's, try to get in under 48. And I think the move's going to take you to 54. And the highs for this were in December. So money rotating in some of these laggards. I don't want to say laggards, but these things have hit their best strides in October, December, and now they're killing it year over year, multiple overbought periods. So, in conclusion, I mean, the leaders this entire year, let's see if this gives you warm fuzzies. Gold miners, kind of inflationary. Overall, gold was also there. I didn't want to have the double correlation. Gold and silver would have made the list, but I had gold miners represent the whole commodity, the yellow silver commodity together expression. Second was China, just underloved. It was a thing that many of us, including myself, until 6 months ago, we were calling uninvestable, and now it's up 50% year over year. So it's underappreciated. I wouldn't say exactly inflationary, but there's obviously a massive tariff story as well that's been brewing. And then third, also Bitcoin, which you can say it's inflationary as well, of course. But these are what's driving the market. Credit spreads have not, widened. There's nothing really scary under the surface. Unemployment, inflation, there's really nothing that's really giving me serious fear, overall about the market and the bull run. And I'll really kind of end with that. So here on SPY, I don't care. Like I said, just to close it up, I don't care about the fear in the market, honestly, until SPY closes under 570 for about a week to 2 weeks. And it starts to go, not sideways, but starts to go lower. And then there will be an exodus from markets if that happens. But I don't see that happening. I think we had a bit of an oopsie as it scraped under 590. I'm happy to see it close on the week up above that level, 590. But again, it's going to do a lot of heavy lifting to get to that $600 mark in mid to late March. Woo! That's a mouthful. Okie dokie, thanks for joining. Artichoke. I got like car seat stuff to do and this whiff waff wibble wobble. Try to enjoy yourself, touch grass, I guess. Go love somebody, yourself, and peace. We'll see you Tuesday, hopefully, with single stocks wrap up. We'll see what the heck has happened in markets, and again later. Peace.